Welcome to the PAI Morning Briefing. I'm your host from Pantheon AI, and today is March 4th, 2025. Good morning, everyone. Thank you for joining me as we dive deep into the markets, dissect the latest news headlines, and explore trends that could shape your portfolios in the days ahead. Grab your coffee, sit back, and let's get right into it.
Let's start with a quick market overview. This morning, the S&P 500 closed at approximately $5,799 and a fraction, with a slight dip of around negative 0.22%. The Dow Jones managed to record a move at roughly $42,760, down by about negative 0.65%, indicating that large-cap stocks had a somewhat sluggish start. Meanwhile, the Nasdaq fared a bit better with a small positive uptick of around 0.28% to settle at nearly $18,227. Not to be forgotten, the Russell 2000 landed near $2,065, experiencing a decline of roughly negative 0.87%.
Turning our attention to the cryptocurrency realm, Bitcoin is now trading at about $84,065, down by roughly negative 2.4%. Ethereum, the second largest by market capitalization, is valued at around $2,115, suffering a decline of approximately negative 1.5%. These slight changes might be reflective of ongoing market indecision as traders weigh risk in both traditional equities and emerging digital assets.
Now, while these numbers might seem like mere statistics on a screen, they tell a broader story about caution in the market and the subtle shifts in investor sentiment. With the mixed performance across the indexes, one cannot help but wonder if we are on the brink of a cyclical adjustment or merely witnessing a temporary pause amid profit-taking. It's a great reminder to remain vigilant, diversified, and always question whether these small dips might offer more than meets the eye. And sometimes, if you feel a little jittery, just remember even the best roller coasters have their stomach-turning dips before the thrilling climb, so hold on tight and enjoy the ride.
Moving to our deep dive into major market trends, it's clear that caution and opportunity are two sides of the same coin these days. Many have noted that after months of significant volatility, markets are now entering a period of consolidation. When investors become a bit jittery about overvaluations or impending macroeconomic headwinds, we tend to see these slight pullbacks in the indexes and even in the digital currency space.
Take the tech-heavy Nasdaq, for instance. Its modest gain amidst broader declines suggests that there is still investor confidence, particularly in sectors that are innovating and adapting to new realities. We have seen a renewed emphasis on artificial intelligence and semiconductor innovation lately, and these developments are not happening in a vacuum. They are supported by robust fundamentals that many market analysts believe will drive long-term growth. As some experts quip, in times like these, every small uptick is like a whisper from the future, urging us not to dismiss potential until we see the full picture.
On the flip side, sectors reliant on traditional economic drivers are under some pressure. With fears of rising interest rates and uncertainty about fiscal policies, investors are treading lightly. This has been demonstrated by declines in broader market indexes like the S&P 500 and the Dow Jones. But sometimes, these downturns are exactly the kind of signals that can prompt savvy traders to re-examine their positions and look for undervalued opportunities. This is where a thoughtful understanding of valuation metrics, earnings growth, and even external influences like geopolitical events becomes crucial.
Speaking of individual stories and key headlines, let's transition into our comprehensive coverage of today's important news stories. 10 stories that offer a multifaceted look at what's driving the market currently.
First up, there's the fascinating story about Nvidia. The report from a Bernstein analyst highlights that Nvidia's stock is doing things we haven't seen in nearly a decade. With several key valuation metrics trading at levels not observed for 10 years, the analysis suggests that Nvidia's stock is increasingly attractive. Now, while it might seem counterintuitive to praise a stock that appears undervalued, it's precisely these moments that can often lead to significant long-term gains. Even though a few investors might joke that Nvidia is acting like that quirky friend who only shows up when you need them most, the underlying message is one of cautious optimism and the potential for robust growth in the tech space.
Next, we have Jim Cramer's rundown of the top 10 things to watch in the stock market today. Cramer, known for his charismatic and sometimes theatrical delivery, points out that Wall Street feels the pressure again. His list encapsulates everything from shifts in consumer behavior to news on interest rate hikes, and it compels investors to pay attention to weighty, sometimes volatile, market drivers. Given the nature of his track record, his insights come with a mix of showmanship and seasoned expertise. One could say he's like the Sherlock Holmes of Wall Street, always on the case looking for subtle clues.
In another intriguing piece, it's reported that 85% of the stock market's return since the 60s came down to one key factor: reinvested dividends. This story isn't just about weighing numbers, it's a reminder of the old adage that slow and steady wins the race. While big market moves often grab the headlines, those compound effects of dividend reinvestment are the silent engines powering long-term wealth. As seasoned investors know, sometimes the magic is in the compounded growth, and in this era of frequent market noise, it's these foundational principles that can lead to financial success over time.
Moving on to policy and trade, we have commentary from Scott Bessent, who recently appeared on Fox News. Speaking on tariffs and trade policy, Bessent emphasized that while Wall Street may be basking in its own success, the real focus, in his words, should be returning to Main Street. According to him, small businesses and consumers deserve much more attention. His remarks have sparked conversations about whether current policies are favoring large financial institutions disproportionately. It's a debate reminiscent of the friendly and sometimes heated arguments we all have at the dinner table about whether to opt for brand names or more practical alternatives. The key takeaway: policy matters, and its reach extends way beyond the boardrooms of Wall Street.
Before we dive into earnings and corporate transitions, let's talk about Nordstrom's recent announcement. Nordstrom has just reported better than expected earnings ahead of its going private transaction. This move is drawing considerable attention as it marks a significant strategic shift in a company that has long been a staple in the retail space. Not only are they reporting impressive earnings, but they are also currently not offering any guidance for 2025, nor are they hosting an earnings call. It's as if they're quietly preparing for a big metamorphosis like a caterpillar deciding it's time to leave its cocoon, but doing it with the kind of finesse that only a decades-old brand can muster.
Speaking of transformation, we then have breaking news from the political arena. President Trump is set to address Congress with a State of the Union-style speech this Tuesday night. While he's expected to talk up his handling of the economy, it seems there's a selective focus in his agenda. Notably, tariffs, energy, and immigration are on the menu, but other topics appear to be deliberately sidestepped. There's a tangible sense of anticipation and perhaps a hint of performance art in this scenario. Whether you're a supporter or critic of his policies, it's clear that this speech is designed to rally a segment of the electorate and potentially shift market sentiment.
Turning back to corporate news, AutoZone stock has slipped on its fourth straight revenue miss. Despite the miss, the company continues to tout strong international results, which they describe as encouraging. This mixed message is emblematic of what we often see in the market, a series of wins that may be partially offset by the challenges witnessed on the domestic front. Traders might find a bit of humor in the fact that sometimes even industry giants have off days, reminding us that no company is immune to the occasional stumble. It's a balancing act of optimism and realism.
There's also notable movement in the energy sector. Honeywell recently announced that it is beefing up its energy security offerings by finalizing a deal with Sundyne valued at $2 billion. This acquisition is a clear strategic move to enhance Honeywell's energy and sustainability solutions unit. In an era when energy security is becoming increasingly crucial, what with shifting geopolitical tensions and the growing energy transition, this deal not only strengthens Honeywell's market position, but also underscores a broader trend of consolidation and innovation in the energy space. It's a little like adding a turbocharger to an already powerful engine.
In the realm of innovation, a tech announcement that caught our attention is the news that Verb is acquiring AI social selling startup Livecom. This acquisition positions Verb's Market.live as one of the industry's most advanced AI-powered social shopping live stream e-commerce platforms. It's a story that's as much about the future of retail as it is about the seamless convergence of technology and consumer behavior. When traditional methods meet high-tech solutions, you get a recipe that's both disruptive and fascinating. One might even say it's akin to witnessing a blockbuster movie where the underdog steals the show.
And finally, in a corporate shakeup that has been the talk of the town, Starbucks has poached Nordstrom's CFO, Kathy Smith. This move hints at an evolving strategy within Starbucks as they look to further strengthen their financial operations. The transition from a retail finance environment into the beverage world might seem unusual at first glance, but it reflects a broader trend where companies in diverse sectors are sharing and learning from each other's best practices. It's yet another reminder that in our dynamic market landscape, skills and insights are highly transferable, even if it means trading a high-end department store for your favorite coffee shop.
Now, having taken you through these 10 compelling stories, let's take a moment to analyze the sectors and what these developments mean for investors. In the technology sector, the shimmering beacon of Nvidia's stock reflects both the rapid evolution of artificial intelligence and the growing adoption of semiconductors. With valuation metrics that have reached near-decade lows, there is an undercurrent of optimism among traders who see this as an opportunity rather than a red flag. It's a sector full of innovation, disruptive ideas, and of course, a bit of unpredictability, kind of like trying to predict the next viral social media trend, except with billions of dollars at stake.
In energy, the landscape is clearly transforming. Honeywell's $2 billion Sundyne deal is a prime example of how energy companies are not resting on their laurels. They recognize that the future lies in robust, secure, and sustainable energy solutions. With global debates centered around energy independence and sustainability, we're witnessing the groundwork being laid for an energy market that is both resilient and responsive to change. This is the kind of strategic move that not only reassures investors but also signals a broader realignment in our approach to energy consumption on a global scale.
The financial sector is perhaps the most nuanced right now. On one hand, the reminder from the dividend reinvestment story that compounding returns are significant reinforces the value of long-term investments. On the other hand, the commentary from Scott Bessent and the performance pressures articulated by Jim Cramer highlight that short-term volatility remains a significant challenge. It's a sector where caution, discipline, and a keen sense of timing are essential. After all, navigating the financial terrain is a bit like trying to ride a unicycle on a tightrope. One misstep can have significant repercussions, but with balance and focus, you can move forward steadily.
Zooming out to the global market implications, these domestic stories have far-reaching consequences. Policy statements from influential figures such as President Trump can reverberate across international markets, affecting trade relations and global investment flows. Similarly, corporate moves by major players in the technology, retail, and energy sectors signal shifts that may alter the competitive landscape worldwide. For instance, as companies like Nvidia and Verb continue to innovate, they not only reshape their industries but also set new benchmarks for global competition. Investors should consider these broader dynamics when evaluating portfolio diversification and international exposure.
In light of all this, the expert insights and predictions for the near future emphasize caution, but also the potential for significant upside. While volatility might persist, especially in the financial sector, the underlying trends in technology and energy are very promising. Market analysts believe that if investors can navigate the short-term fluctuations, there could be substantial growth opportunities, particularly among companies that have already demonstrated resilience and innovation during challenging times. It's a bit like finding a diamond in the rough. Sometimes you have to sift through a lot of gravel before you uncover something that shines brilliantly.
Now let's add a little humor into the mix. When it comes to market volatility, I sometimes think it's like my morning commute in a big city: unexpected delays, sudden stops, and occasionally a detour that leaves you scratching your head. Yet just as we adjust our route and find the quickest way home, seasoned investors adjust their portfolios with an eye on long-term gains, even if that means riding out a few bumps along the way. And if those bumps happen to come with a side of global intrigue, well, that just makes the ride all the more interesting.
Before we wrap up, I'd like to pose a few thought-provoking questions for you, our valued listeners. With the current market displaying a blend of cautious optimism and measured skepticism, do you believe that these slight declines in major indexes could be the precursor to a larger trend? Could today's undervalued tech stocks and strategic moves in energy be harbingers of a shift that benefits the long-term investor? And in this fast-moving landscape, how will reinvested dividends continue to shape our portfolios, especially when the compounding effect is described as the engine that has powered 85% of market returns since the 60s? These are just a few questions to consider as you plan your next move.
Let's quickly revisit our key takeaways from today's briefing. We began by examining a modest market pullback across major indexes: the S&P 500, the Dow Jones, the Nasdaq, and the Russell 2000, with cryptocurrency showing a slight decline. We then unpacked a variety of stories, each offering a different slice of the market's current narrative. From Nvidia's rare valuation turnaround to strategic corporate shifts at Nordstrom and Starbucks, and even policy discussions affecting Main Street, it truly is a dynamic time to be involved in the markets. Furthermore, with the energy sector gearing up for significant deals and the tech sector paving the way for innovation, there is a wealth of opportunities and challenges to explore.
In our detailed sector analysis, we observed that technology remains a strong driver of future growth. Energy is undergoing a strategic transformation, and the financial sector is a blend of caution and disciplined long-term strategies. On the global front, economic policies and corporate decisions are influencing markets far beyond our domestic borders. As investors, continuous learning and adaptive strategies are crucial. After all, understanding these nuances is what sets apart the thoughtful strategist from the rest.
I want to extend my sincere gratitude to you for listening in today. Whether you're a seasoned trader or an enthusiastic investor who's still finding your way, remember that Pantheon AI is always here as your information co-pilot, navigating the intricacies of market trends and news alongside you.
As we start to wrap up this morning's conversation, I encourage you to take some time today to reflect on your investment strategies. Ask yourself, are you comfortable with the current market volatility? Could the dips in major indexes actually be opportunities in disguise? And more importantly, how are you positioning your portfolio to capture both short-term opportunities and long-term growth? These questions aren't just theoretical, they're critical for making informed, strategic decisions in today's ever-changing environment.
Before we sign off, I'd like to give a big shout out to Pantheon AI, your information co-pilot, for always ensuring that learning about the markets doesn't feel like a full-time job. And remember, if you ever have questions or need further insights, you can always ask questions to our AI co-pilot. Come back and join us tomorrow for another in-depth episode where we'll continue to peel back the layers of market complexity and explore more stories that matter.
Until then, keep questioning, keep learning, and never lose sight of the fact that even in the unpredictable world of finance, there's always a strategy waiting to be discovered. Thank you for being a valued listener, and I look forward to our conversation again tomorrow.
Learning should NT feel like a full-time job.